Have you ever wondered why some people seem to get richer even when they earn the same or less than everyone else? It's not luck. It's not privilege. It's mindset. Most people work hard just to spend harder, but a small group, they play a completely different game. A game where every dollar becomes a worker, a seed, a soldier. And if you stay with me until the end of this video, you'll learn exactly how to shift from being a consumer to becoming a true investor, someone who builds wealth quietly, consistently, and powerfully. 1. Buy assets, not toys. Most people don't realize that every purchase is a vote for the kind of future they will live in. The poor buy toys to escape their reality. The wealthy buy assets to build a better one. It's not because the wealthy are born with some special discipline. It's because they understand a simple truth. Toys cost you. Assets pay you. Every time money comes into your hands, it presents a fork in the road. You can choose the path that gives you a temporary boost of pleasure, or the path that gives you a long-term boost in freedom, stability, and opportunity. A toy is anything that fades in value the moment you buy it. Fancy gadgets, impulse fashion, status-signaling purchases that impress strangers but imprison you financially. These things drain your wallet and give you nothing in return except a short-lived high. But assets? Assets are seeds. They grow. They compound. They take the same dollar that someone else wastes and turn it into something stronger, bigger, and more durable. The tragedy is that society teaches consumption, not ownership. People are trained from childhood to spend. Holidays, sales, trends, marketing, they're all carefully designed pipelines to make you think you need more stuff to feel whole. But wealth doesn't come from owning more things. It comes from owning the right things. An asset continues working long after you've stopped thinking about it. A rental property earns you rent while you sleep. A dividend stock pays you quarterly without asking for your labor. A piece of software you create or a digital product you sell online might continue generating income for years. Even simple things like buying books, tools, or education can qualify as assets because they expand your skills and unlock opportunities that increase your earning power. A toy gives you momentary excitement. An asset gives you leverage. Every financially free person eventually learns the same lesson. Money must either work for you or you will always work for money. The reason most people stay broke is because they don't give their money a job. They let it sit idle, or they spend it the moment it arrives, effectively firing it before it even has a chance to work. Imagine if every dollar you earned was an employee. Would you hire it into something that produces? Or would you send it on vacation forever in exchange for a 3-day dopamine hit? This is why wealthy people appear so calm. They know their army of assets is working around the clock. Meanwhile, the poor feel constant pressure because they rely solely on the sweat of their own labor. Before you buy anything, especially something expensive, pause and ask one powerful question. Will this purchase make me richer or poorer? If it makes you poorer, ask yourself if the temporary pleasure is worth the long-term setback. Often, just slowing down to reflect is enough to break the spell of impulse spending. And here's the secret. Once you get used to buying assets, toys stop impressing you. You begin to see the real price behind them. The lost opportunity to grow your wealth, the lost freedom you might have gained later. Buying assets instead of toys is how you escape the endless cycle of working just to spend, just to work again. It's how you shift from being controlled by money to controlling it. Wealth begins with one small choice repeated consistently. Invest in what grows, not in what fades. 2. Study investments. Investing is not a game of luck, it's a game of understanding. The wealthy know this, and that's why they treat money as a subject to be studied, not feared. You don't need a high IQ or an elite degree to become a successful investor. You need curiosity, humility, and the discipline to learn. Most people avoid studying money because they find it intimidating. But the truth is that money becomes intimidating only when you refuse to understand it. The moment you start learning, even slowly and imperfectly, the fog begins to lift. Wealthy people read books, study charts, analyze trends, listen to mentors, and observe markets not because they're obsessed with money, but because they know knowledge reduces risk. Risk is highest when you have no idea what you're doing. Ignorance isn't just dangerous, it's expensive. Investing is not about predicting the future, it's about being prepared for it. When you study investments, you learn how different assets behave. You learn why some rise, why some fall, and why some stay stable. You begin to understand principles like diversification, valuation, market cycles, and risk management. This understanding becomes your shield against fear and your weapon against financial stagnation. A person who studies investments sees opportunities everywhere. New industries, undervalued assets, shifting technologies, emerging markets. On the other hand, someone who never studies is blind to all these possibilities and remains trapped in the illusion that earning a salary alone is enough. The wealthy treat financial education the same way athletes treat training. They invest time into it because they know the returns are lifelong. They read about stocks so they understand business models. They study real estate so they recognize good deals from bad ones. They analyze online businesses, index funds, bonds, and commodities, not to master everything, but to understand enough to make informed choices. They know that every investment has its own rhythm, its own risks, its own potential. They don't put their money into something just because someone else is doing it. They take responsibility for their decisions. Knowledge builds confidence. Confidence builds action. Action builds wealth. And the beauty of this process is that it doesn't matter where you start. You can begin with one book, one article, one podcast. You can start with $10, $100, or $1,000. The important thing is that you begin with understanding. The moment you commit to studying money, you stop being intimidated by it. You realize that markets are made of patterns, and patterns can be learned. You realize that wealthy people aren't lucky, they're informed. And once you become informed, you'll see that investing is not a mystery. It's a skill, and like any skill, it rewards those who practice. Study investments not to get rich quick, but to get rich wisely. Your future self will thank you. 3. Compound interest mindset. Real wealth rarely comes from a sudden windfall. It comes from something far more powerful and far more predictable: compound growth. The richest individuals in the world understand that wealth is not built in explosive jumps, but steady climbs. They think in decades, not days. They value patience over excitement and consistency over drama. Compound interest is the silent engine behind their fortunes. The concept is simple, yet its power is often underestimated. When your money begins to earn money, and that new money also begins to earn money, your wealth grows exponentially. It's the financial equivalent of planting a seed that becomes a tree, and then that tree drops seeds that become more trees, and soon you have a forest. But here's the part most people misunderstand. Compounding rewards time more than talent. You don't need to be a financial genius to benefit from compounding. You need discipline, consistency, and the willingness to wait. Most people sabotage themselves not because they lack resources, but because they lack patience. They try to get rich quick, jumping from one idea to the next, constantly uprooting the seeds they planted before they ever have the chance to grow. The wealthy do the opposite. They plant, nurture, and let time do the heavy lifting. Compounding works best when paired with long-term thinking. The moment you start thinking beyond this month, this year, or even this decade, your financial behavior changes. You stop chasing trends and start building foundations. You start prioritizing investments over impulses. You begin to measure decisions not by how they feel today, but by how they will look in 5, 10, or 20 years. The compound interest mindset teaches you that every dollar saved or invested today is not just money. It's a future employee working tirelessly on your behalf. Over years, even small contributions can grow into massive sums because compounding transforms time into profit. The reason compounding seems slow at first is because the early stages are invisible. The growth is small, almost boring, but behind the scenes, momentum is building. Eventually, the money hits a tipping point where the growth becomes dramatic. This is why those who start early have an almost unfair advantage, but the good news is that starting today is infinitely better than waiting. Whether you're 20 or 50, the moment you adopt a compound interest mindset, your financial trajectory begins to rise. Compounding also teaches emotional discipline. It trains you to resist impulsiveness because you begin to see the long-term cost of short-term decisions. You realize that an unnecessary purchase today is not just a lost dollar, it's lost compounded growth over years. The compound interest mindset changes how you view time, money, and effort. It gives you peace because you know your wealth is growing quietly in the background even when you're not working. It gives you confidence because you understand the mechanics behind your progress. Most importantly, it gives you freedom. Compounding is not just a financial principle, it is a philosophy of patience, discipline, and long-term vision. Embrace it, and your wealth will grow in ways that once seemed impossible. 4. Delay luxury. Delaying luxury is one of the most misunderstood yet most powerful financial disciplines in the world. People often think Stoic or wealth-minded individuals reject luxury altogether, as if the only path to success is through a monk-like existence of denial and austerity. But this is not true. Luxury is not the villain. Luxury is not the obstacle. Luxury is not the problem. The real issue, the thing that silently destroys financial stability, is timing. Luxury purchased too early becomes a weight. Luxury purchased too late becomes regret. Luxury purchased at the right time becomes freedom. Most people buy luxury from their sweat, from their wages, from their hours, from their energy. Their job pays the bills, their time fuels the lifestyle, and their luxuries become chained to their labor. That is why the wealthy behave differently. The wealthy delay gratification, not because they hate comfort, but because they understand the math of freedom. They allow their assets to grow first, and only then do they let those assets pay for their lifestyle. They don't buy the car because they want to show off. They buy the car because their investments are already producing enough passive income to cover the cost without touching their base capital. They don't buy the designer clothes to impress strangers. They wait until the expense represents a trivial percentage of their investment return, not a major portion of their monthly paycheck. When the rich spend, they spend from strength, not from strain. Delaying luxury teaches discipline. It prevents you from becoming addicted to appearances before you've built the foundation that allows you to sustain them. Many people trap themselves in financial quicksand because they chase the outward symbols of success long before securing the inner architecture of wealth. They finance cars that drain their income. They buy homes at the edge of their budget. They pay for vacations that take months or years to repay. Every luxury purchased prematurely becomes a chain that locks them into their job, their debts, and their scarcity mindset. The wealthy avoid this trap by making a simple but powerful decision. Freedom first, luxury later. If you want the nice car, the high-end watch, the beautiful home, the exotic trips, or the latest technology, There is absolutely nothing wrong with that desire. Human beings naturally seek beauty, comfort, and pleasure. But the wise understand that pleasures consumed too early become burdens, while pleasures consumed at the right time become effortless bonuses to a life already built with intelligence. When your investments pay for your luxuries, every indulgence tastes sweeter because it comes without guilt, without strain, without sacrifice. And here is the deeper Stoic lesson. Delaying luxury strengthens the mind. It teaches you that you are not ruled by impulse. You learn to evaluate desire rather than surrender to it. You cultivate patience, clarity, and sovereignty over your decisions. You stop living reactively and start living intentionally. And eventually, you reach the point where you can enjoy any luxury you want, not because you are chasing status, but because you have designed a life where luxury no longer threatens your stability. When luxury becomes a choice instead of a craving, you have mastered both money and yourself. That is the real wealth. 5. Build long-term plans. Long-term planning is the dividing line between those who achieve lasting success and those who remain trapped in cycles of reaction, urgency, and short-lived progress. Short-term thinking is easy. It satisfies emotions, it feels productive, and it gives the illusion of momentum. It's the mindset of people who focus on quick wins, immediate rewards, and what they can get right now. But short-term thinking creates short-term money. It produces results that vanish the moment circumstances change, the economy shifts, or motivation fades. In contrast, long-term planning requires patience, discipline, and vision. It forces you to zoom out, to see beyond the noise of the present moment, and to ask deeper questions about the direction of your life. That is why long-term planning creates generational wealth. It builds structures, not moments. It builds systems, not surprises. It builds stability that compounds year after year. The wealthy don't think in weeks or months, they think in decades. They don't ask what they can afford today, they ask what future they are building. They map out financial milestones, investment strategies, career paths, skill development timelines, and lifestyle goals. They plan not only for expansion, but also for protection. They consider market cycles, technological shifts, inheritance, and what legacy they want to leave behind. This long-range vision allows them to make decisions with clarity instead of fear. While others panic during downturns, the wealthy simply follow the plan they created long before chaos arrived. Long-term planning also changes your relationship with risk. Without a plan, risk feels frightening because every decision feels final and irreversible. But with a plan, risk becomes a calculated part of growth. You understand which risks move you closer to your long-term vision and which risks only satisfy short-term impulses. This clarity is one of the ultimate advantages of long-term thinking. It protects you from distractions. Every day, every month, every year, the world throws opportunities at you. Business ideas, investments, trends, temptations, shortcuts. Most of them lead nowhere. But when you operate from a long-term framework, you can instantly filter choices. Does this align with my long-term direction, or does it pull me off course? Stoicism and wealth building intersect beautifully here. A Stoic does not drift through life reacting to every emotion or circumstance. A Stoic chooses direction. A Stoic commits. A Stoic accepts that meaningful outcomes require consistent action across long periods of time. Planning is not about predicting the future. It is about preparing for it. It is about acknowledging that you have control over your choices even if you do not control the world. Your life changes the moment you stop being reactive. When you stop letting emergencies dictate your priorities. When you stop living paycheck to paycheck, not just financially, but mentally. The moment you decide where you want to be in 5, 10, or 20 years is the moment you reclaim authorship of your life. Planning gives you power. It gives you direction. It transforms chaos into structure and fear into confidence. A decade will pass whether you plan or not, but the person who plans will arrive with purpose, prosperity, and inner peace, while the person who doesn't will wonder where the time went. Long-term planning is not a luxury. It is the foundation of every meaningful achievement. It is the architecture of wealth, wisdom, and freedom. If you want real freedom, real choices, real security, invest first, indulge later. Wealth is built by intentional decisions, not accidental money. Become the person who plants seeds today so you can harvest abundance tomorrow.